Smithian, can you hear us?
I can. If you can speak up just a little more loudly, and or if you can adjust the volume at your end just a little higher, that would be helpful. Thank you. I appreciate the accommodation.
You betcha. She's on that, and we're just waiting for Mayor Velasco to come back, and then we've got all the representation and quorum and all that we need.
So which
Great.
items? 5 and 7. Yes. 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 Yes and yes.
Okay. And Mayor Velasco is back. All right, Supervisor, we will start the June 21st meeting of the Governing Board only of the Valley Habitat Agency. And for the record, Angie, why don't you just call roll? Let's just do that.
Chair Wasserman.
Here.
Board members Rocha.
Here.
Tate. Constantine.
Here.
Velasco.
Here.
Arenas. Simidian.
Committee in here.
Thank you. We've got everything. And before we proceed to the consent agenda, do I have any speaker cards from anyone wishing to speak? Hi, Walt. All right, he'll have a chance in a few moments. So we now move on to the consent agenda, which has items 1, 2, 3, and 4 listed. I looked over the agenda. I would suggest our committee consider adding 5 and 7 to the consent agenda, and then the rest be presentations.
So moved.
Motion made.
Before I second that, Chair,
Yes.
point of order, did you want to take the report from the Public Advisory Commission prior to the going through the consent calendar as it is in the agenda, or did you want to skip that? Right after the chair's report, there is the report.
Okay, no
from
report
Walter.
from the chair. I'm happy to do it that way if you prefer. Mr. Glines, come on forward, Walter.
Yes, sir. I don't have a report. We did have one meeting, and we went over the budget in some degree of detail, and Ed will likely cover some of our concerns that we raised during his report.
Yep,
Thank you.
thank you very much.
And then I did second the consent
You
calendar.
seconded the motion.
I did.
Any comments? Mr. Velasco?
Yes, I just had one quick comment on the consultant agreement. Under appendix, I'm trying to find it, I believe it's appendix,
Number 2 with Dudek?
yes. Under appendix A, I believe it was, I'm trying to find it here.
Edmund, this sounds like this will be a question for you.
I just noticed the hourly rate error.
Okay.
And it was under the first, let me try to get back to the item here.
So hourly rates, is this what you're looking at?
Here we go. It's Exhibit C.
Exhibit C, gotcha.
If you take a look at the hourly rate, it says $200, and then in parentheses, it says $225.
Okay.
So I just wasn't sure which one it was, and does that affect the overall contract amount in it?
It shouldn't. I don't know why it's showing the two rates like that. Yeah.
Okay, so which rate are we approving?
Tara, do you know? So there's two rates that are shown for one of the hourly rates in Appendix C. One is showing a rate of 200, and then in parentheses it is 225, correct?
That's right.
Yep. This is Dudek.
Agenda item number 2.
18.
We can look into that.
But as far, to his point though, as far as approval today, are we approving the total contract amount?
Yes.
So the hourly, it's like a check, you know, we write 200 and they write 225. So we just wanted to know which one it was.
Yeah, no, that's a great question. I don't know.
Okay, but either way,
yeah.
the maximum amount of compensation shall not exceed $79,020, and the words and the numbers match on that one.
Right.
Yep. Is that good enough for you, or would you like it coming?
No, I don't want to hold it up and it's on consent. I just wanted to make sure staff is aware of that.
Yeah,
So that,
no, I didn't catch that, so thank you.
Hello?
Hello.
Sounds like Sylvia's
Yeah.
joined us.
So that,
Hi, this is Sylvia. I am calling in.
Thank you, Sylvia. We started the meeting, and we're on consent item now with Member Velasco asking a question about the hourly rate in number 2.
Okay, awesome. Thank you so much.
so Edmund, I just wanted to make sure staff is aware of that, and then I just wanted to make sure that it didn't change the overall amount that we're approving.
No, that's the maximum amount of the contract, yeah.
Good
But
enough.
but this is a good thing you brought up to us, and I'll have Tara reach out to them and find out why
I
that
would
is
just
the way
hate to
it
have you
is.
guys
Yeah.
receive a bill for $225 an
No.
hour when you were thinking 200. Good
200,
enough.
yeah.
I'm ready for
Okay.
approval.
Thank you. We don't have any members of the public wishing to speak on items 1, 2, 3, 4, 5, or 7, to my knowledge. Is that correct? Seeing nobody, we have a motion, we have a second. All in favor, say aye. Aye. Opposed? That passes unanimously, 4-5. I'm guessing 6-0, Angie?
Can I do a roll call vote for these, just
Oh, 'cause
these
we have
other
to do
calls?
on the phone.
Oh, we need a roll call vote. All right, Supervisor Simidian, I heard your aye. Would you repeat that, please?
Committee and I?
And Sylvia, your vote?
Arenas, aye.
Thank you.
Thank you.
Chair, just for
Yes.
clarification, we have to have a roll call vote for everyone.
That's because we're in Morgan Hill?
No, Valerie's nodding at me going, we have to do that, because we have people on the phone.
All right, and Valerie and Rich, if you'll help remind me, I remember when we do roll call votes, we want to ask the members who are absent to vote first before we disclose how the other members vote, as compared to disclosing how we vote first.
Well, you're doing a roll calls. Well, that's, I mean, what you did is just fine. Yes, take the ones on the telephone first.
Okay, that's what I thought. Thank you. All right, that now moves us on to item number 6, Silicon Valley Community Foundation, Friends of Santa Clara Valley Habitat Agency report. This is a for information item only, no action. And Valerie, I've got you as the lead.
So we are giving just a brief update, which is that the Friends Group has been totally formed. We've gone through all the steps required by both the state and the feds to obtain tax exempt status. And we do have people here present from the Silicon Valley Community Foundation to make a presentation with regard to the different investment vehicles that are available. So unless the board has any particular questions about the Friends Group, we also expanded the board from 3 to 5. But unless you have any particular questions, we'd just like to have the presentation.
Thank you. I've got a question, but I'll look to committee members first. No? And members Simidian and Arenas on the phone, do you have questions at this time of the individual we have here from the Community Foundation that's going to make a presentation?
No, thank you, Mr. Simidian. Mr. Simidian saying no, thank you.
Thank you. And
Likewise, no questions.
okay, wonderful. I have one question to ask you, Valerie, and then we welcome our presenter to make her presentation. This is a non-action item, and when you just spoke, I just heard you say that we were going to hear about some options to choose from.
Well, not for you to choose from, the options that the Friends will choose from.
Got it.
The board doesn't have any decision-making authority right now with regard to the endowment.
Thank you.
But the board is the one that selected the Community Foundation to be the entity that deal with the endowment.
Thank you for that clarification. Thank you. And welcome. Please come on up, introduce yourself.
Hi, everyone. I'm Caitlin Daly. Wonderful. Go ahead and open this up. Oh, okay. Technical difficulties for those on the phone. All right, and can I distribute this out? And then I'll make sure to send an email follow-up to Edmund to share with these digitally so the folks on the line can have access to our PowerPoint printout, as well as some of the resources that my colleague and I have brought today. Let me introduce myself. My name is Caitlin Daly, and I'm a development officer at the Silicon Valley Community Foundation, and I'm here to talk to you all a little bit about our nonprofit investment program. I'm joined here by my colleague Bert, who is our Senior VP of Investments, and he'll go more deeply into the investments piece of this program. So just a quick agenda for what we want to cover in this presentation is just introducing ourselves, letting you know a little bit about the program, how the investments work, our governance and philosophy around these investments, the pool options, and then also time for Q&A. So our investment program has been around for quite a few years now. We work with close to 80 nonprofits throughout the Bay Area and some across the country. And it has been a really great tool for nonprofits to grow their assets, but also to network and collaborate with other nonprofits in the region. And there's been a really healthy investment of time and capacity building strategies involved within this program beyond building nonprofit investments. So one of the really exciting things that nonprofits find attractive about this fund is that we have a calendar of events. So whether that's board governance, whether that is capacity building and learning how to fundraise, networking with other nonprofits that are aligned with your strategy as a nonprofit. We also have a nonprofit fund support team. So we have 2 individuals who lead this program at the Community Foundation, who are the main points of contact to facilitate the fund programs and work collaboratively with the points of contacts at Friends of. We have the great expertise on hand at the Community Foundation with Bert and his team, which I'll share more about, as well as planned giving support. And then just to say a little bit about that, if you have a individual or a family who would like to facilitate a gift to Friends of, they could easily transact that gift of their estate, or if they maybe have some sort of stock option that they'd like to transact as a gift towards your initiative, we can help facilitate that on your behalf. We also provide online services so that the folks who are managing your investment plan, you can go online, pull reports, so you not only have a point of contact at the Community Foundation, but you also have online access to monitor your funds.
Thank you. Excuse me. A question, if I may, probably to Valerie, perhaps Edmund. What was just presented in that last slide, I don't envision any of us going online, directing dollars anywhere. I don't think this is this is applicable to our particular investment with the Community Foundation. And I just want to make sure what's being said here for community public purposes is not misconstrued by anyone who might be watching at some point. Okay. You know, we make fun not a lot of people watch us, but anybody and everybody can. Yeah. And what you just mentioned a minute ago, we're not, this committee, this board, we don't direct investments. We don't say put this into Netflix and take it out of Cisco. Yep. We don't say go into tech. We don't do any of that. That's not what this investment of the 10% of that fund into with you and your company is all about. So I don't know if there's a way, perhaps, if you can kind of refine or constrain your statement, presentation to what it is that you're actually doing, what we're doing together, what you're doing for us. Yeah. That would be helpful, I think.
Well, in terms of online service, and there's a delegated fund advisor to a nonprofit investment fund that is either a board member of that nonprofit, which I understand would not be a member of this board, and there's usually a fund advisor who's delegated a member of the nonprofit, an employee of the nonprofit, who makes any decisions and reviews those reports and then reports back to their board.
I think this is the last slide that may be a little not targeted to what you're really interested in.
Okay.
But in short order, they're going to get to the investment governance and philosophy, which I think is really the core of what.
Thank you, Valerie.
So the Friends Group has 5 board members. I'm one of the board members. And our CPA is here. He'll be involved in sort of the oversight of the foundation. You know, the monies and how we invest them in the foundation. So a lot of this is more directed at, let's say, me as a quote-unquote employee and the board members of the Friends. But everything you said about the governance board is correct.
Okay,
Yes.
thank you.
And then the last piece I'll share regarding to the programmatic pieces of this this investment tool, is our 2 dedicated staff members. Michelle Fries, she works at the Community Foundation and has been there since 2003. She's our director of this program, and she has a senior associate who also works on facilitating the funds and the nonprofit program. And both of these individuals are well networked throughout the community, and are really just a great point of contact for resources beyond the scope of the investment program. And I will, from then, hand it over to Bert, my colleague, who can talk more about those investment pieces that might come up.
Thank you. And so I don't forget, do we have anyone in the public who has any questions about this particular agenda item? No, thank you.
Hi, good afternoon. My name is Bert Foyce. I'm Senior Vice President of Investments at the Foundation. I've been with the Foundation 14 years. And if I can just maybe address your question. So the relationship is an agency relationship where these assets, we're investing them on your behalf, and an agency, or on behalf of the Friends 501c3, as an agency relationship. They're not our assets, and you're right. Nobody at the Friends would be going online to transact money. We're not a brokerage account or a bank or anything like that.
Or has control in any way of the dollars, personally can withdraw, none of the above.
Right, and no one on the Friends Group has that authority either.
Thank
Yes.
you.
Okay, so what I'm going to cover then is the governance structure, just so you understand who's overseeing these assets and who's managing them and what their roles are, what the different investment pools options are, so that there are choices of how the monies are allocated, and then what the performance has been, and any questions that you might all have. So on the governance side, there's 3 parties involved. There's our investment committee, which is comprised of board members of Silicon Valley Community Foundation, the board chair, the investment committee chair, the CEO, and then non-board members who have deeper expertise across different investment asset classes. So those on the screen are our board and committee advisors. They ultimately, they set policy and oversee execution, are ultimately the responsible party for the assets. We work with an outside investment consultant, Colonial Consulting, out of New York. We've worked with them since 2007. Actually, prior to that, because of our merger in 2007, one of the parent entities did as well. They only work with nonprofit clients, overseeing $37 billion in assets. What we like about them is that there's no conflict of interest in that they're not selling products. They only earn their revenue based on the quality of their advice, and they work with other nonprofits exclusively, so they're in tune with the nonprofit community and our needs. The third component of the governance structure is internal, the investment team, which I oversee and report up to our COO, CFO, Paul Volosky. There's 4 of us on the team. We oversee a variety of investment relationships, Colonial Consulting being one, and working with our consultant. We also oversee many other portfolios where outside financial advisors might manage a specific donor's fund. In total, we're $13.5 billion in assets over probably 40 different portfolios. Our investment philosophy has 4 key tenets. First is to build an asset allocation that's going to meet the objective of that portfolio, and I'll show you those portfolios in a moment. To be broadly diversified across asset classes and strategies and geographies. We're not trying to take concentrated bets or market time or tactically decide where we should be allocating. It's really broad diversification. Manager selection, it's where we really rely on Colonial Consulting to identify and vet and pick high-quality, top-performing managers. And then discipline to stick to our policy and avoid changing plans, say in response to the 2008 financial crisis, but to stick, rebalance diligently back to policy. We're also proud of the fact that we've worked closely with Colonial Consulting over the past 5-6 years is to ensure that the diversity of our asset managers represents the diversity of our community and our grantees and our board and our staff. And so you can see here we've continually allocated to women and minority-owned firms, not just big Wall Street names. And that's been across gender and ethnic group as well as across all asset classes. So moving to the different investment pool options, there are 5, and these are arranged in terms of a risk-return profile, with long-term growth and social impact being the 2 long-term options that are designed for long-term growth, endowment-style type spending. And on the other end of the spectrum would be our short-term and capital preservation pool, which would be, for nonprofits in particular, would be more like for reserves funds or cash management funds. And then in the middle is the balance pool, which is also growth-oriented, but with more moderate risk and return profile. Here's the same 5 pools laid out on a risk-return chart, just showing that each one is specifically designed to be a discrete risk-return option, so that you can allocate to either one or more of the pools to kind of meet your unique needs or the Friends Fund's unique needs. But as you get higher expected return on the Y scale there, you can see there's higher expected volatility and risk with those investments. Here's our performance. The blue line is each of the pools with the long-term growth social impact pools at the top and the capital preservation short-term pools at the bottom over different time periods. And each one's compared to a benchmark, a broad market benchmark of international all-country world stock index and a U.S. bond index. What we're trying to do over rolling 3, 5, 7, 10 years is meet or exceed these benchmarks. We're not always going to do that over all time periods, which is fine, but over the long term we should be consistently outperforming, which you can see over 5, 7, 10-year periods we are. And these returns, like in the 5-year column, the 7% range for the long-term social impact, that's what we would expect from a modeled perspective, looking out 10 years of kind of the return profile we would expect over a 10-year period. Similar with the balance pool, more in the 5 to 6 range. The short-term pool, more in the 2% range. Interest rates have come up, so you can expect a higher return going forward. And then capital preservation's cash. So that's going to be more like a money market type return. And then this is showing historical performance year by year back to 2008. This one I think is important. If you look at the 2008 column at the far right, you can get a sense of what the downside risk is and what your comfort level would have to be if you allocated, say, 100% to the social impact pool. That year it was down 30%. The next year it was back up 30%. But if you were nervous with 30% drop and pulled your money out and didn't give it time to bounce back, that would not be great. So Friends needs the discipline as well to understand what they're investing in and what the ride might feel like.
Thank you.
And if I make a comment through the
Yes,
chair.
please.
I think in 2008, everyone's investments looked like that.
Yes.
To be fair.
Yes. Yeah, no, these are, you can see the benchmark. We were better than the benchmark, so, yeah.
Bert, a question, if I may. yes, we all understand 2008. I'm looking at this. I guess I don't understand the negatives in 2011, 2015, in long-term growth, social impact, balance, everything. What do you attribute those downturns?
Yeah, in 2011, yeah, the market had a bit of a correction. Part of that was expectations that fixed income was heading back up, and so bond prices react to that. In fact, they didn't. Rates went sideways, but that was part of it. And then I'm trying to remember what was happening in the stock markets back then, but there was a bit of a sell-off at that time as well. 2015 was more in response to the oil dramatic drop in oil prices and commodity prices, which have kind of spooked the markets, and we had a sell-off in 2015. That's why you see.
And those affect your long-term growth and social impact funds?
Yes, these are broadly diversified across asset classes. So we have exposure, U.S. equities, international equities, emerging markets. We have exposure to oil and gas, timber, global bonds. So a number of those asset classes responded to those, not just the commodity and oil and gas.
All righty, thank you.
This is just an example of a report that we prepare for nonprofits and our donors after a while to show year by year what their aggregate results have been. And visually at the bottom, the chart illustrates, and this is an actual nonprofit fund that invested in 2013 with a little over $1 million. You can see the added investment activity, the support fees to cover our operating costs that were taken out, a withdrawal that the nonprofit made, and then their ending balance. So just an example of what reporting might look like. Oops. So let me talk a little bit about fees and expenses. There's a support fee, as I mentioned, and you saw on that last chart of our administrative cost, and that's a flat rate based on the amount invested. And at the bottom of the first table there, you can see it's 1% on funds up to $1 million, and then it drops to flat rate of 0.75 over $1 million, then it drops again to 0.5. In addition to that, each investment pool, so that's a fee that we're assessing on a monthly basis, 1/12 of that monthly. And that covers the services of having the fund, processing money that you may be putting in, money you may be taking out, being able to view that online, and if you took advantage of the educational support activities and workshops. The other set of expenses are the investment pools themselves. So just like a mutual fund has an expense ratio, you can think of this as the expense ratio of the portfolio. So this is the average weighted cost of all the managers that we've hired to manage different asset classes. It's the cost of our consultant, the custody of the assets at a custodian. And those range, depending on the pool, from 0.16 for cash up to a little over 1% for the long-term growth pool. So your all-in cost would be, if you added those two together, if you wanted to compare to other types of costs.
But roughly 1.5% to 2% combined.
Yeah, depending upon, again, the size of the fund and the pool you're in. Yeah.
Okay.
So how much time do I have? I want to make sure yep, okay. So I'm going to show you the long-term growth pool since it's the largest portfolio and the most diversified, just and where it's a $500 million portfolio. So you get a sense of the full size and breadth. Then I'll show you the social impact pool. And I understood there was interest in the capital preservation pool, so I have information on that if that is of interest. So it is broadly diversified, as I mentioned, across U.S. equities, global equities, fixed income, and alternatives. Those are further allocated here into sub-asset classes in equities by large cap, mid cap, small cap, international emerging markets, or global mandates where managers can search for opportunities broadly. Fixed incomes further allocated across U.S., global, corporate, and inflation-protected securities. And then our alternatives, we have exposure to hedge funds, private equity, and private real assets. And one unique aspect to this, working through the community foundation, is that even though the assets of the Friends 501c3 has complete liquidity and can get in and out of the pools at any time, the pool itself, at least the longer term ones, are investing in illiquid assets that enhance return and help actually dampen volatility over time. But all of our nonprofit funds in total are less than 10% of this pool, and so we can manage that liquidity. So it is a unique advantage that you have access to higher performing assets in the portfolio, alternative assets. This is modeled based on Colonial Consulting, our consultants' projections of what a median long-term return would look like. So as I mentioned, about 7%. And then some kind of worst case scenarios, again, based on modeled data. I wanted to show you here that in addition to benchmarking performance against indices, we also look at peer returns. And the dark blue bar shows the long-term growth pool's return over 1, 3, 5, and 10 years. And then the light blue and the orange bars are two peer group surveys. The middle one is the Community Foundation peer group of 97 different community foundations. And the orange bar is the NACUBO Higher Education, so University Endowment Foundations of 109 participants in that survey. So you can see we're consistently, over all time periods, either meet or beat the median returns of other peer groups. And that's been consistent over the last 10 years. Oops. So moving to the social impact pool. One thing that's unique about this is that we've aligned this portfolio. It is a market rate seeking rate of return using the same benchmarks and the same expectations for return. However, there's an impact overlay in that we've aligned the goals of the portfolio to align with the UN Sustainable Development Goals, specifically around themes of sustainable global growth, inclusive economies, healthy communities, and community development. And so the way we do that is in the public equities, and here you can see asset allocation, how much to equities, bonds, and alternatives. In the public equities, we're selecting managers that actively integrate ESG or environmental, social, and governance factors in their research to pick companies that either have higher scores in those areas or to eliminate companies that have poor records of social performance, community interaction, environmental record, things like that. So it's really it's additional data that managers can use to make more informed risk-return decisions. On the fixed income, we have exposure to microfinance, green bonds, community development, affordable housing through the different strategies there. And then in the private assets, we can go a little bit deeper on the impact side where we're investing in private equity funds that might be addressing renewable energy, alternative fuel sources, job creations. HCAP Partners is a mezzanine debt fund here in California, lending to smaller businesses in LMI census tract areas and focusing on quality jobs. So that's that offering. And interestingly enough, it's our highest performing fund over the last 5-7 years. It's doing quite well. The modeled return on this is a little bit lower because it's a smaller portfolio. It's not as diversified, and we take a little bit less illiquidity risk because it's a smaller portfolio. But generally, it would have the same long-term objectives as the long-term growth pool. And then last, the capital preservation pool. If you did use the cash option, or if you wanted to have a small amount for near-term distributions, most of that money is in the Vanguard Federal Money Fund, so very safe. The other portion of it we ladder in deposits at local banks and local community development financial institutions. and those are listed there on the page. Those are primarily FDIC insured deposits. We can, up to 10% of the portfolio can be non-insured, and we generally use those for deeper relationships like self-help credit union that does really excellent work in our lower income communities. And that, right now, the yield on this portfolio is about 1.7%, and with the Fed rate hikes, it'll be going up. So last, let me just, why do nonprofits partner with the Community Foundation as an investment partner? One, proven track record of competitive returns that I've shown you, broad diversification across asset classes and strategies, much broader than you could do at a smaller portfolio size. You get the expert oversight of our investment committee, our consultant staff, competitive costs, exceptional investment managers, transparency in terms of fees and costs. That's one thing we try to be extremely transparent on. And the simplicity of a single investment account with one statement to reconcile and balance on a monthly or quarterly basis, however often you do that. So let me stop there and any questions.
Thank you. Let's turn first to our two members on the phone. Members Simidian and Arenas, any questions here for Bert?
No questions from Simidian. Thank you, sir.
Thank you.
No questions from me either. I don't know.
Thank you. Committee members, any?
Good.
Good. Mr. Velasco.
Yeah, just can you remind me, assuming you guys are successful and the money is raised in this Friends account, what do you do with it? What's the goal?
So the endowment is for long-term management of the reserve system once the permit sunsets. So that'll be in 45 years. So the endowment is supposed to grow in today's dollars to somewhere between 90 and 100 million. And then the sort of the income on that endowment fund will pay for land management activities, the 47,000 acres.
Okay.
And roughly 10.35% of the fees that we collect now. We're going through a program review starting in the fall to see if we are collecting enough money from fees. Are we collecting enough money? Is the percentage set aside for the endowment, is that enough? And that's something we're going to do. So that, as the money is collected, it then, we haven't figured out how we do it, whether it be a quarterly or yearly basis, we would transfer. I think we should do it in a more frequent sense, probably on at least a quarterly basis as we get fees from participating communities and districts, that then that money would be invested in. The Friends group was looking at the Social Responsible Fund was the one they were sort of leaning to, but they have some questions that when they give a presentation to the Friends group, there'll be more specific questions about some of those funds and where and which companies are involved in those funds. So the money then will be invested with the foundation, and we're supposed to get a return on investment of 3.5%, or somewhere between 3.25% and 3.5% is what the return is after fees and inflation. So that's sort of the target, and the performance of both the long-term and the social responsibility fund meet those targets when you're considering current inflation rates of 2 to 3%. So obviously, if we have hyperinflation like we did in the 70s, all bets are off on that. Yeah.
So most of the money's coming into the endowment from the fees?
Yes. Yes.
This, of course, doesn't preclude the private citizen from donating.
Oh, no, not at all.
Right, and so, and again, it's for the overall management after the plan, if the plan were to expire.
Correct.
Okay. Okay, thank you.
You're welcome.
Thank you. And the plan is to transfer approximately 10% of funds collected for endowment investment to this Friends group.
Yes.
Is what it is. And we're all old enough to know that 3.25, 3.5. We've seen CalPERS miss, those are just estimates, and we appreciate that. But for purposes of compounding and estimated contributions, then you've got to use some number like 3.5% to get to your 90 million in 45 years, and et cetera, et cetera. So none of us will be here when that clock expires, but we certainly hope you continue to beat the market in the years ahead with the public's money. Appreciate that. Any other comments? None. All right. That concludes item number 6, which was for information only, no action required. Thank you very much for your presentation, both of you. Thank you. Look forward to, I imagine, annual reports on what's going on, and hope you can do better than the market. Item 7 was handled in consent. Item 8 is the fiscal year, Edmund, it says 2016-17 annual report. So this is the report on the year that ended a year ago.
Yes, we're always a year behind.
I can see that from this
Yeah,
report.
it feels like my mornings recently. I've been just a little bit behind and slow.
And it may seem like the last time you were here, you heard the same presentation.
It does, Tara. It does. So,
It's Groundhog Day for Chairman Wasserman, that's for sure.
okay, I was almost thinking this was a typo. So we don't give an overview of the prior year. I mean, I know we had budget workshop. I understand that. I guess I'll ask, why is this coming at a year after the year's ended?
So
What am I missing?
okay, so the annual report, we're required to report on the previous fiscal year by March of the following year. So this is the annual report that was due to the wildlife agencies in March of 2018 on the
Okay.
previous fiscal year.
Okay.
And so we did the report to the implementation board at the
Yes.
last meeting, but we have not presented to the governing board, which
Okay.
includes other people.
And for those of us on the implementation board that have seen it before,
There'll be
And
a
our-
quiz
and our
at
next,
the
thank
end.
you. Okay, and our next meeting, governing then, was 3 months later.
Yes.
So we jumped from March to June.
Yes, and
Okay.
normally we would do this presentation in March to the joint board, and that's what our goal is next year. We were a little, we weren't ready to give a presentation in March, and then the governing board didn't have a quorum, so it ended
Okay.
up not mattering.
Going forward, and please, I look forward to hearing your report again.
And going forward, we're actually going to attempt to do it in 2 parts, so that it's not as long. We'll do
Okay.
a reporting out on the covered activities portion, so how many projects have we permitted, what are the impacts, and then the fun stuff will be later, like how many species have we preserved,
The
what are our
pictures.
restoration projects.
Okay,
So
thank
make sure that one is interesting to some people but not others, and the other one's interesting to no one. I'm just joking.
Is it realistic going forward that it's 9 months after the year?
Yes.
That's what it takes to
It's-
compile?
It only takes a few months to compile, but there's a lot of data entry, there's a lot of steps involved, and we are reporting on the behalf of 6 other agencies.
Oh, gotcha.
And so there's a lot of back and forth that happens before we even get the final information to put in the report.
Thank you. I've gone to see movies twice before, so.
I know,
Why not?
it's kind of like this. And because there's a few people who have already seen this, I'm going to skip through some of the slides that are a little bit long.
Yep, and I think from their name placards here, it's Member Rocha is the only one who hasn't seen this.
Okay,
Actually, I was not at the last
Oh, you had
implementation.
your surgery?
Yeah, so,
He was under the knife.
yeah, so.
Oh, okay.
so really, you're the only one getting the double feature.
Okay, I was looking at the implementation board, but true.
Don't, never assume.
He was looking
for
for
it.
some support to say, hey,
As I was practicing, I was saying to myself, man, I could cut out some of these slides next time.
Exactly.
And so,
And if I
I'm
step
gonna-
out and get some popcorn or something, just keep going.
if you need to take a restroom break,
There you go. I'm happy to have my cupcake.
okay, good.
Go for it.
Celebrate. Okay, my name is Tara Donovan. I'm the Principal Program Manager for the Santa Clara Valley Habitat Agency, and this is our fiscal year 16-17, not a typo, annual report. And so here's our annual report top 10. What did we do in 2016-17? So we covered 54 projects. We acquired 55 acres of new land. We confirmed the presence of 13 of our 18 covered species in reserves or future reserves. We initiated or have been planning 5 restorations projects across 4 watersheds. We continue to have our pilot plant creation project for Cardiac ceanothus. We have 201 acres of western boring owl breeding habitat under a new management agreement. We did our stay-ahead compliance tracking. We or our partners received nearly $1 million of grants to implement the habitat plan. The Habitat Agency or its partners received $4.6 million of reporting year funding, and then we had $3.1 million in expenditures. So covered projects. We had private projects, 8 in the city of San Jose, 5 in Morgan Hill, 9 in Gilroy, and 10 in the county in Santa Clara County. For public projects, there's one project in the city of Gilroy, 1 in Morgan Hill, 3 in San Jose, 2 for county fleets and facilities, 1 for county communications, 8 for county parks, 3 for participant special entities, and not least, Santa Clara Valley Water District, 9 projects. So what does this mean? We're in our 4th year of implementation, so we can look at trends over time. Here you have in red our permanent impacts, and in orange our temporary impacts. So in years 1 and 2, we permitted 54 projects. And in year 3, 57 projects. So the reason we can compile years 1 and 2 into 1 year is that we only had a partial year for the first year. And in year 4, we had a similar number of projects, 54 projects. But you'll notice in this 4th year, the impacts were about half of the previous 2 years. And that means the funding we received is lower. So we had the same number of projects, but their footprints were smaller. And so you'll see that when it comes to the fees received in this fiscal year. So looking at where our impacts occurring, in green here is natural lands, yellow agricultural, and in gray developed. So most of our impacts are occurring in agricultural and in developed areas, with just about 20% occurring in natural lands. And we see a similar trend with temporary impacts, where those are also occurring mostly in agricultural and developed landscapes. Okay, on to the fun stuff, the reserve system. So all those fees go towards acquiring land and managing land for endangered species. Public and private projects pay money into a central fund, and then we do the mitigation on their behalf. Well, the Pacheco Creek Reserve was donated to us by Caltrans, primarily for it, and the reason we received it was because of the values for restoration. As you can see here, a portion of Pacheco Creek runs through the property, and it's a great opportunity to do both riparian and stream restoration. It also is home and has habitat for a number of our covered species. 4 of our amphibians or reptiles, the California tiger salamander, California red-legged frog, the foothill yellow-legged frog, and western pond turtle all have habitat there. For birds, there's a potential for a western boring owl, tricolored blackbird, and the least bell's vireo. We also have potential habitat for the fragrant fritillary, which may look familiar because it's also our mascot. And then the elusive kit fox. If this species is to be found anywhere, it's to be found in the Pacheco Pass region. And more importantly, there's 2 underpasses on the property. And this is providing us with an opportunity to do a connectivity study. So launching in this year, we'll be doing a 1-year camera trap and roadkill study through the Pacheco Pass region. We'll be setting up cameras on both the culverts on this property as well as neighboring properties to see what wildlife are using these culverts under the highway, as well as looking at what animals are being hit on the road. And that will help us inform restoration opportunities on our own properties, as well as for our partners like Caltrans or High Speed Rail going through the region. So you see here the puma and the badger are 2 species we're likely to find through this study. We also are doing another study for the sycamore alluvial woodlands, looking at how does it hybridize with the non-native London plane tree? What is the distance required for a stand to stay purely native? Also, this is one of the few places in the county where we have a run of steelhead. So in wet years, we'll have steelhead passing up through the property. We've already started a restoration project there with Point Blue's straw program, and have had children coming out there to restore riparian areas along 2 of the creeks. And then we also graze in the land to maintain low grass on the property. So moving on from Pacheco, we've initiated baseline studies at both Coyote Ridge and in the Calero Conservation Easement area, as well as in our 2 management agreement areas at Don Edwards and the Regional Wastewater Facility. So we have found bay checker spot butterfly, California tiger salamander, and western burrowing owl at both Coyote Ridge and at Calero. At Don Edwards and the Regional Wastewater Facility, we have 2 breeding populations of the species, of western burrowing owl. For California red-legged frog, it's found at Coyote Ridge. And for foothill-legged frog and western pond turtle, those are both found at Calero. As far as plants go, Santa Clara Valley Deadlia, most beautiful jewel flower, Loma Prieta Huerta, on Hamilton thistle, and smooth leucingia are found at both Coyote Ridge and at Calero. The fragrant fiddleberry is found at Coyote Ridge, and as is the Metcalf Canyon jewel flower. So we have found that most of our covered species are in areas that we have enrolled, like Coyote Ridge, or plan to enroll in the near future, such as Calero. So restoration. Another big part of our program is restoration. And so we've initiated or completed or are in planning phases for 5 projects currently across the county. And I'm just going to locate them for you here now on the slide, and I'll go through them here. So at Calero County Park, we have a wetland and pond restoration project that was completed in 2006 as well, and we are now in the monitoring phases for that project. At Pajaro Ranch, a Nature Conservancy property, we've completed a hedgerow restoration project. Up on Coyote Ridge, the Water District has made a lot of progress on the Coyote Cenothos creation project, and they are currently in their test phase, the 3rd test phase, which was initiated in 2016. At the Pacheco Creek Reserve, we've initiated riparian restoration with Point Blue, as I talked about before. And then we have 2 projects that are slated for construction this year. At Joseph D. Grant County Park, we have about a 1-mile stream restoration project along San Felipe Creek. We just received all of our permits, so we'll be starting on that project in a week or 2. And then on Coyote Ridge, we're restoring 2 ponds for the tiger salamander and red-legged frog, and we anticipate that occurring either in this fall or next year. Okay, stay-ahead provision. So this stay-ahead provision is one of the metrics that we use to determine where are we with our habitat plan compliance. And so we look at, let me back up. This measures, is the rate of conservation at or above the rate of impacts. So if we are at 100%, we are at 100% compliance. So for example, for grasslands, if 10% of the impacts have occurred, we have to have preserved 10% of our conservation requirement for grasslands. So this chart shows that for all natural communities and western burrowing owl for which there have been impacts, we are meeting stay-ahead compliance. For conifer woodlands, we've had no impacts and no conservation. For this natural community, we only are required to preserve 30 acres, and so we will likely preserve that in a single acquisition. And so I'm just going to click through these. They show you the number of acres we are ahead for each of the natural communities. So for grassland, about 100 acres ahead. For chaparral and northern coastal scrub, 5 acres ahead. Oak woodlands, 2 acres ahead. For riparian forest and scrub, 54 acres ahead. wetlands, 0.8 acres, ponds, 0.4 acres, streams, 13.2 miles, and for western Boring Owl, 704.7 acres. And you may be thinking, for wetland and ponds, that doesn't seem like a lot ahead, but those land cover types aren't impacted that often, and so we don't have to be a lot ahead for those. They're very costly to impact, and we just don't see those impacted that often. We also track stay-ahead compliance for plants, and you're seeing maybe a little different picture here as we have some red. For most of the plants, we are ahead. We've preserved Coyote Ridge, which has huge, abundant populations of our covered plants. So abundant and in such high distribution that while you may think we have multiple occurrences, we only have 1 or 2 of some of the species. And that's why we're showing a deficit in our stay-ahead, because we've projected occurrences of millions of plants that across 1,000 acres that are a single occurrence. And so there's a perception in our compliance that we're not in compliance for stay ahead, and that's something that we're working with the regulators to ensure that we are actually, that our preservation has a conservation equivalent to it, that we are preserving higher quality occurrences than what we are impacting. So for Coyote ceanothus, which is only found here in Santa Clara County, we are required to start measuring stay ahead in year 5. And that pilot project on Coyote Ridge will be offsetting our impacts to that species. For Mount Hamilton thistle, fragrant fiddleberry, and Loma Prieta hoyta, Metcalf Canyon jewelflower, we've had no impacts to date, so all of our occurrences protected are ahead. For Dudleya, Santa Clara Dudleya, we are ahead, but for Smooth Lysyngia, we're behind. As I said before, our impacts have been small. So we had a single occurrence removed of 6 plants, but are protecting an occurrence of 27.5 million plants. For Most Beautiful Jewel Flower, it's a similar scenario, where we've impacted an occurrence of 100 plants and are preserving over 3 million plants. So moving on to funding. So our funding comes from fee and non-fee sources. And so we can see, and the non-fee also includes land acquisition by others. So in year 1, so this isn't actually all money that the Habitat Agency received. Some of this money that was paid to benefit the Habitat Plan. So in year 1, the Open Space Authority bought Coyote Ridge. And that goes towards when we're accounting to the wildlife agencies as part of our funding for the plan. So we account it for our compliance, not for our budgetary reason. We didn't receive that money ever. So this is going to be different than the budgets that you see for the Habitat Agency. So in year 1, it was $17.8 million with acquisition of Coyote Ridge. We received $8.3 million in fee and non-fee funding in year 3. And in year 4, this current year, $4.6 million. Here you see a decreasing trend in fees, but I don't want to spoil your talk. I'm just going to say in this next year, it's going to look a little different. So don't ask me any questions about it. I don't want to steal Ed's thunder. So we have $30.6 million across the first 4 years. So again, both fee and non-fee funding make up the Habitat Plan implementation. And the Habitat Plan assumed 55% of fee funding and 45% non-fee funding, and that's exactly what we're seeing during implementation. Our expenditures are similar. You know, the first 2 years we acquired Coyote Ridge, and you can see here that we have expenditures by the Habitat Agency, land acquisition by partners, and then grant expenditures by partners. So our local partners do receive grants that benefit the Habitat Plan, and we account those when we're looking at Habitat Plan compliance. And so you can see year over year, we are expending. The first year we had an acquisition, so that was a big expenditure, and we haven't had one since then. So our expenditures have stayed rather level at $2.2 million for year 3 and $3.2 million for year 4. So our total expenditures of our 4 years of implementation, accounting for that land acquisition by OSA, is $16 million. And so here's by the numbers. So the Habitat Agency itself has expended $7.2 million. Land acquisition by other partners is $8.6 million, and then grants expended by our partners is $234,000. And so you can see here that our partners are very important in terms of implementing the habitat plan. So are we on track? So this is the only slide that I've included that's not a compliance slide. This was just me trying to see, we have a 50-year permit term. We're in year 4. So it's our reporting year is about 8% through the habitat plan permit term. If we're looking at equal progress throughout time, or are we about there? So for permanent impacts, we've spent about 8% of our impacts, and for temporary impacts, 9%. For conservation, we've had 2 acquisitions. We've had Coyote Ridge and the Pacheco Creek Preserve. And with each acquisition, this is likely to jump by a big amount. So we're only at 5% this year, but the next acquisition is going to bring it to 10, 15% in a single acquisition. We're going to see a big jump there. So the fact that we're not at 8% or above is not a concern for us. Existing open space enrollment, Clara, we've been working with the county parks for a couple of years now to enroll a conservation easement. That easement's about 2,200 acres. And so once that's enrolled, we're going to see that we're going to have an increase in existing open space enrollment. For fee funding and non-fee funding, funding is coming in a little bit slower than we anticipated, but this next year we're going to see a big increase in fee funding. As far as non-fee funding, grants, both federal grants have been slower to be released. For example, we don't know that we're going to see a fiscal year 18 Section 6 grant to be available to us. So it's a $2 million grant that our program assumed that would be available to us every year. And the feds have just been a little bit slow on the release of their grant proposals. And so we're seeing really a change in the flow of state and federal grant programs. But we are seeing the state has a lot of initiatives to bring more funding into conservation, and that helps to fund the recovery portion of our plan. Because we are both a mitigation and recovery plan, a lot of these recovery grants are available to our program. And then expenditures are pretty low. We don't have a lot of land yet. Our partners do a lot for us. They also offer us lower rates to do the work. And so our expenditures are also not too high at this point. So thank you to all of you, and thank you to all of our partners and consultants that help us implement the habitat plan. And I'd like to open up for questions. And I apologize, I went a little bit fast this time. You may not have felt it that was fast, but.
These are some of the sharpest members on this committee, so this was the time to do it.
So if you have any questions,
Absolutely.
I'm happy to go into more depth.
Member Roach, any questions about the fragrant fritillary?
That again?
Would you like to say that 5 times fast?
Yes. Yes, you can.
I did have just one basic question, and it's more of an informational question around the partners. I mean, you actually showed a list, and my question was earlier in the presentation, but when you got to that, if you wouldn't mind going back to that. So when you talk about our partners, and there was farther down at the end.
Is it this one?
One more.
This one?
The other way.
Expenditures or
The other
funding?
way. Down.
This one?
There you go.
This one?
So is that what you consider our partners?
So our partners, so there's people that we pay money to.
Because when you talk about partners
I
in terms
know.
of land acquisitions and grants, and I was trying to get my head around it, and I didn't know if this was what you referred to.
So both is, I know I use partners pretty broadly, colleagues, partners. So our true partners are our co-permittees. So the San Jose, Gilroy, Morgan Hill, Santa Clara. County Parks plays a huge role. For example, with Calero, their staff time has helped tremendously with the implementation of both the Clara Restoration Project, as well as the planning and then the future implementation of the San Felipe Creek Restoration Project. They do that as part of what they do. Again, also the Water District, they've been implementing that Coyote Ridge, Coyote Sea and Nothis creation project, and that's been on their own dime. So they've been implementing habitat plan requirements as partners in the program. Also, OSA, Santa Clara Valley Open Space Authority, and the Nature Conservancy, we work a lot with them on regional efforts to support conservation. They're partners with us on, ensuring that there are conservation dollars available through grant programs, as well as providing us opportunities to work with them on their lands. That Pajaro Ranch example restoration project was on the Nature Conservancy land, so that was an opportunity for us to work with them. And the Open Space Authority, they bought Coyote Ridge, and we put a conservation easement on it. So those are examples of our partners. And I guess some of these people are people we pay to be our partners, so.
Okay, so then there's two partners in concept or theory. One is the ones that are member agencies, and the other that we partner with in terms of the work that.
Sure, yes.
Okay, got it, thank you.
So we're paying certain people to be our friends. I don't know what that says about us, but.
Yes, you don't hear that too often.
There's got to be a joke about a bad marriage in there somewhere. Any other questions from members here? And members on the airwaves? Members Simidian and Arenas, any questions?
No questions for me.
Thank you. Member Simidian? All right.
Forgive me, I had it muted. No questions for me, Mr. Chairman.
Thank you. And seeing none from the public either, we will consider your report, Tara, received.
Thank you.
Thank you very much once again. We'll now move on to item number 9, which is a report from Edmund, our executive officer.
Thank you, Chairman. I'll try to be as brief as possible. So this spreadsheet you see, the reason why I included it, I snipped it from our budget report that was included in item number 5, excuse me. And it's just to highlight in the middle column that we now have 4.1 million in grants. When we gave our presentation to the implementation board on the budget last month, we only had $107,000 down there. So what happened between the two meetings was that the Department of Interior finally released our funding. For those members of the board that weren't at the implementation board meeting, we gave a little background on what was going on. So the Department of Interior, we have a new sheriff in town, and he wears a big hat, and he's from Montana, Secretary Zinke, and he had a different approach than Secretary Jewell. And what they did was an internal audit of all grants over $50,000 that were going to be that were appropriated by Congress, but were under review by a single person in Washington who worked for the Department of Interior, and he was an appraiser from Montana, and so our grant got scrutinized very, very intensely, and we were concerned we weren't going to get the money, that the money was going to be withheld for whether ideological or political reasons, we weren't sure. But we weren't the only ones going through this. There was $5.5 billion in grant funds that were going under the scrutiny. Made a trip to Washington in April with people from Florida, Texas, Defenders of Wildlife, California. And we met with bipartisan appropriation committees and Department of Interior oversight committees, a lot of different staff, people at the White House and stuff, and said, what the heck's going on? So I think that effort, along with Prime Policy Group from who works with the county as their Washington lobbyist, who contacted Feinstein, and Feinstein wrote some letters to Zinke, also reached out to Senator Murkowski from Alaska, and finally we got the money. And so it's a $2 million grant, is now officially been awarded, that we thought would have been awarded last September, but now it is, we do truly have it. And the Wildlife Conservation Board typically matches these grants 1-to-1, if not more. So conservatively, it's $4 million. We have to use it for land acquisition, so I'll talk a little bit about that later in my report. So this is really good news. So we're slightly ahead of target from last June when we were doing this very same thing a year ago on grants. And as you can see, we're way ahead on mitigation fees collected. I expect by the end of the fiscal year, it'll probably be over $10 million.
Awesome.
And the big reason for that, a couple projects in Gilroy came in, we didn't even know were on the radar. And a couple projects in the city of San Jose that had been going through the development review process in the city finally happened. The biggest one being the Meadow Fair Evergreen project out there in East San Jose. So they finally came in and paid the fees. So it's all good news on the revenue side. Now, from advocacy, we pushed very hard that Prop 68 would have funding for NCCPs. So and it wasn't just us, it was the California Coalition and the Nature Conservancy and a lot of our partners that Tara referred to. The good news is Prop 68 passed earlier this month, and there's $52 million in funding for NCCPs. And that's some of the money that the Wildlife Conservation Board uses to match Section 6 program from the feds. It's also money available for us independent of any federal program. And there was WCB money that was used on the Coyote Ridge property, and we were going to use Wildlife Conservation Board money if we had been successful in getting the Richmond Ranch, which we weren't. So it just, I'm not going to go over these, but it gives you some of the highlights of Prop 68 are listed below. So next steps is we're starting to, so on a trip I took to Sacramento in, I think it was May, I met with primarily the staff of our state delegation. I did meet with Senator Bell and Senator Wachowski. And the takeaway was that some of these folks aren't familiar with what we're doing and how this is kind of a local government program that part of the funding to make it successful comes from the state. And there was an interest from a lot of the legislators and their staff to take a visit. So we're going to, in the process of probably in September, be doing some field trips of either, hopefully some of the members of the Assembly and Senate will participate themselves, and also at the very least we can get some of their staff out there and show some of the good work that not only we're doing, but the OSA and Mid-Penn County Parks and others are doing. And also we're working with our California Coalition to try to get some of the cap and trade monies earmarked for NCCPs, and at the very least earmarked for wildlands conservation. Right now there's money available for ag conservation, and there is overlap between what we do and rangeland conservation, but we're trying to get some money specifically earmarked for managing wildlands for carbon sequestration, and it'll be another funding source that could help us with land management and acquisition. On the federal side, the good news is we got the grant. Here's the latest I've gotten on the fiscal 2019 funding for the same program that we just finally got the money from. And again, it's things are out of whack between what the administration priorities are and what Congress's priorities are. This is a bipartisan program. I did not hear any Republican staff criticize this program. It's
Or Democratic staff.
Or Democrat, yes, right. Correct.
You heard that, Supervisor Simitian? Thank you.
Yeah.
I did, sir. I wasn't surprised, but I did.
Thank you.
So the administration proposed 0. The House proposed 53.5, and Congressman Calbert is a big reason why that is 53.5. He's from the Riverside County area. And Senate appropriations was just over 49 million, and likely, based on what happened last year, coming out of conference committee, that'll be the 53.5. But like Tara alluded to, it's unlikely that that money will be solicited for grant applications this year. But I did not include it as a potential grant source of funding for this upcoming fiscal year. The $4 million that's for this fiscal year is looking at Wildlife Conservation Board meeting monies, possibly Moore Foundation, possibly the Water District. On the final page, I just want to give you a quick update on land acquisition. The enrollment at Clara is very important for the habitat plan because of the plant occurrences on it, and they also have a yellow-legged frog, 2 yellow-legged frog occurrences on the property. So it's really important for us continuing to have plant occurrences protected in advance of impacts, and it's really important for meeting our conservation goals and objectives.
And Edwin, you said 2 yellow-legged frog occurrences?
Correct.
Does that mean they found 2
No,
frogs?
sorry, several thousand.
That,
But
okay.
separate, I should say separate population occurrences.
Thank you.
Yes. We're in the process of negotiating with the United Technology Corporation for acquiring another 1,500 acres of their property. So not where any of the facilities were, or any of the activities. They're going to retain ownership of that. They would be doing structuring the deal very similar like they did with OSA. They would be going through the state heritage tax program, so they'd be donating the land. We would reimburse the state for 55% of the value of the property, and it'll end up being a good deal because of that for us and for them for tax reasons. We're working with the city staff, City of San Jose staff, in enrolling some of the buffer lands around the regional wastewater facility with a conservation easement. It's one of the best areas remaining for successful breeding of burrowing owls. And in the other category, I just want to briefly let you know that we're currently in negotiation with 4 other landowners independent of the United Technology Corporation. We're in the early stages. We have an offer in with one that's being reviewed. We also post as in negotiations with one landowner in the Tulare Hill area. I think it's in the county portion of Tulare Hill, but it might be one of those properties that crosses jurisdictional boundaries. There's 2 other properties that we were in negotiations with the landowners, but we ended up being pretty far apart on value. One was in the Gilroy area. Well, actually, they were both in the Gilroy area. And one was floodplain land, 100% floodplain, but the individual still thought their land was worth like it was prime real estate. So we just backed off of that deal. The other one was a large ranch on the outskirts of Gilroy to the east, and the landowners was somewhat ambivalent about selling, but then approached us and with more of a desire to sell, but his idea of value was very different than what I know what an appraisal would tell us. And we'll pay a little bit over appraisal if we have to, but we were several thousand acres several $1,000s per acre apart on what we thought was reasonable valuation. We submitted an offer on a property. Again, it's one of those properties that's on the border of San Jose, and I believe most of it's actually most of it's in San Jose, some of it's in the county. And the offer was rejected. And that's a property we did offer above appraised value, but because it's important for connectivity. But again, it was one of these situations where we think it's worth this and the landowner thinks it's worth triple that. So unfortunately, that didn't work out. OSA is taking the lead on 2 other acquisitions that we would help fund. One is more long-term, another is hopefully will happen in the short term. And that's kind of where we're at on acquisitions at this point. San Felipe Creek, I think Tara covered that, so no need to repeat that. Okay, thank you.
Thank you. Member Arenas and Simidian, any questions of Edmund?
Actually, I do have a question about, Edmund, you mentioned, I think it was under the Safe Neighborhoods Parks Local Assistance. You mentioned Evergreen and Meadowfair Park, and I didn't quite catch what the project was. Is it just providing some support through the Department of Parks and Rec?
Yeah, sorry. There is the, so that was a two, my understanding is that was a two, it's that Arcata property.
Oh, the Arcadia project?
Yes. Mm-hmm. Yeah, I know it goes by several names, and and there were two phases to that project. One was a public phase for the parks. So it was converting essentially what was burrowing owl, foraging habitat, and I guess old farmland, I guess, right? And yeah, and so that project came in last this fiscal year, and then the second phase came in relatively quickly, which is the private development phase of it. And then the second big project in San Jose that came in was that phase 2, I believe, of Communication Hill. At least phase 2 in our world, the way KB Home is. I know there were phases of that project built before the Habitat Agency existed, but there was these. So the second phase came in, and the city issued their grading and building permits, and that triggered the fees being paid.
Oh, I see. Okay, so this is just the fees, as the development reaches a certain point, then it means that those fees get released to you, or not to you, but to the agency, and that's just a collection of the fees, is what I'm hearing you say.
Correct.
Okay. I thought it was maybe the other way around, because it said for support and local assistance to the Department of Parks and Rec. Okay. Thank you. That was my question.
Thank you. Walt, do you have any questions?
Supervisor Simidian here, no questions, Mr. Chairman. Thank you.
Thank you. Committee members, any further questions? Seeing none, thank you. We'll consider that report received, Edmund. Any future governing board initiated agenda items? Anyone here on the committee or by teleconferencing wish to add anything for a future agenda? Hearing none, we'll move on to adjournment, but before we do that, this governing board will meet again on September 20th in a joint meeting with the implementation board in these Morgan Hill facilities. Thank you very much, Member Constantine. I would like to ask, we've got a July 19th implementation board meeting agendized. I would suggest, Angie, perhaps Edmund, whatever, a doodle poll or some sort of something. I don't know how your turnout will be. Most of the people I've spoken with are really trying to avoid meetings, if possible, in July. But if there is time-sensitive stuff, then we got to do that.
No, I don't think, I haven't talked to Angie about this yet, but I think we're good. I don't think there's any time-sensitive information that will be needed to be heard by the implementation board in July. So
Okay.
I think we can officially send out a notice canceling that meeting.
Thank you. I'm looking to my two fellow implementation board members that are here. No objection, I assume?
I want
So you want to meet?
Yeah.
All right.
And Sylvia's also on the...
Sylvia, you're on the implementation board as well?
Yes.
Okay, it sounds like you may be getting a notice that the July 19th implementation board meeting only will be canceled. So just a heads up to that till Edmund or Angie get something out. All right, with nothing else on there, this meeting is adjourned, 4:26.
Thank
you all
you.
very much.
Thank you, Mr. Chairman.